Taxes, your favorite subject. What everyone needs to know to remain legal in the USA. Bom dia. Let's dive into expat taxes, covering mistakes, strategies, and requirements for digital nomad taxes and U.S. retirees. Navigating taxes are especially intricate for U.S. citizens living abroad. Thus, it's crucial to engage a skilled professional tax team well-versed in international tax treaties. Today, we are excited to introduce you to Nicolas, one of the tax experts, CPA, with BrightTax. We'll discuss the most common costly mistakes and provide strategies to mitigate your tax burden. BrightTax specializes in filing U.S. expat taxes worldwide. The information shared in this video is applicable regardless of your tax residency. We've trusted this team for the past 3 years. Their contact information is listed in the description of this video. So, let's dive in. It'll be fun. Nicolas, please introduce yourself and let everyone know a little about your credentials and BrightTax.
Absolutely. So my name is Nicolas Castillo. I work with BrightTax. We're a U.S. tax firm that specializes in expat taxes and taking care of all your needs from a tax perspective with kindness, ease, and expertise. I grew up in Miami, Florida. I studied there at the University of Miami, got my CPA, started my career there. But after COVID, decided that my wife and I wanted to change things a little bit. And so we moved to Spain, where we're currently living now as expats ourselves. So yeah, we're in a great position to be able to advise other people on their expat tax situations, whether they're in Spain, in Portugal, or anywhere around the world, really.
First of all, can you explain a bit about U.S. filing requirements for expats, deadlines, and things to consider when earning as a digital nomad?
There's a lot of confusion about filing requirements as a U.S. citizen that's living outside of the U.S. And a lot of people hear things online and think, okay, I don't make over $100,000, so I don't have to file. And maybe there's a tax treaty that helps me so that I don't have to report anything. But I have to say that is mostly untrue. As a U.S. citizen, you live anywhere in the world, you're still required to file a tax return as long as you make around the minimum threshold of income from any source, which for a single person, that's just over $13,000. For a married couple, 2 U.S. citizens, that could be more like $27,000. For someone who's married filing separately, or married to a non-U.S. citizen, it's actually $5 is the threshold. So if you make more than $5, you have to file.
That one's very interesting.
Yeah. I can't tell you why that rule is there, but it is what it is. And so April 15 is still an important date for expats because that's generally a filing deadline for Americans. Thankfully, expats like us get an extra 2 months to file until June 15. Generally, that's to give us more time to put together tax information from the local countries, but we still have to pay our taxes by April 15. And if you don't, you risk running penalties and interest on it. So that's a really important date to keep in mind, even though you're not really required to file by then, you have to pay.
Would digital nomads file quarterlies?
So digital nomads and anyone who is self-employed, so you don't have an employer that's paying your taxes on a biweekly basis for you, you have that requirement, that responsibility on your own. So at 2 weeks after the end of every quarter, you are expected to make some kind of payment that's equal to 25% of your total tax for the year. Could be estimated. They won't penalize you for being off by a little bit.
Okay, now that we have a context for digital nomads, what about U.S. retirees living abroad?
Retirees have, maybe it's a little bit easier in the sense that when you're taking pension income, you're taking Social Security benefits, a lot of times you'll get your taxes withheld on those payments. And so in a way, someone is making those payments for you. But at the end of the day, if you have a tax liability, you are expected to be making estimated payments, or you run the risk of having a penalty. So it's still really important to chat with someone, see what tax you might owe at the end of the year, and make those timely estimates.
Before we dive deeper into those scenarios, can you explain tax treaties and how they work?
Tax treaties are a concept that bring a lot of confusion to taxpayers. And so it's a really useful tool in, let's say, extreme cases where maybe there's a more complicated thing happening. Now, our U.S. law, the tax rules that we follow on the regular tax returns, that will generally give us the ability to avoid double taxation. So tax treaties are for our back pocket to save for a rainy day, but we usually don't need them because we have two provisions already in the U.S. tax code. One of those is the foreign earned income exclusion, and that one is for individuals that are working. They have earned income that they are earning from abroad that allows them to effectively exclude up to $120,000 of that from their taxable income. So if you're running a business or you're employed while living outside of the US, then you can exclude up to $120,000. It's great. Mainly the things that you have to qualify for, the requirements you have to meet to qualify for that. It's just physical presence in Portugal or somewhere outside of the US. You can't spend more than 35 days in the US, or you have to be a bona fide resident of that country, meaning that's where you live, that's where your bank accounts are, it's where your home is and your life is effectively. Now, when we're talking about Portugal and other countries where there are high tax rates, we can look at the foreign tax credit. The foreign tax credit says that any taxes you're paying on your income while abroad are going to be credited against the US tax on that same income. So this is the very straightforward non-double taxation provision that says, okay, I'm paying 37% tax in Portugal on my income, on my dividends, on my pension. I am going to be able to apply that 37% against, let's say, the 20% or so in the US and not pay anything else to the US.
And that, can I use both?
You can. It tends to be a determination whether, when you have earned income, we might use the foreign earned income exclusion. If you have passive income, we might use the foreign tax credit. If you have both, we could use a combination or just the full foreign tax credit. Depends.
Okay.
What are the key tax considerations for U.S. expats who work remotely as digital nomads, especially regarding global income and potential tax treaties between the U.S. and other countries?
If you're a digital nomad, you're living outside of the U.S., your income tax is going to be eligible for these two potential deductions, the foreign earned income exclusion and the foreign tax credit. Now, as a self-employed person, you might also come into self-employment tax, which is, for those who don't realize, it is Social Security and Medicare taxes, the employer side and the employee side. So when you are employed, let's say you're working for Apple, your employer, Apple, will withhold some of that Medicare and Social Security tax for you, and they will also pay in the same amount on your behalf. When you're self-employed, you're both your employer and the employee, so you have to pay both. And so that's about 15.3%. Now, that 15.3% cannot be reduced by the foreign earned income exclusion. It cannot be credited by the foreign tax credit. So what we have to look at is this other treaty, which is really important and really useful. It's between the Social Security Administration and the Social security equivalent of other countries. Thankfully, we have that with a lot of countries, such as Portugal, where effectively, if you're covered in Portugal under that social agreement, you're paying social taxes there, and eventually you'll get social benefits, then you are exempt from paying that tax in the US.
I worked for a Portuguese company. I pay my taxes here in Portugal. I'd file in Portugal. And then how do I file, or do I file with regards to that in the United States?
So if you are employed by a Portuguese company, then you are not considered self-employed. So none of your income would be considered self-employment income and won't be subject to self-employment tax in the US. So you would only be paying into the Portuguese social tax system. Let me contrast that with being self-employed in Portugal while you're living in Portugal with clients, doing your freelancing. You would be still subject to the social tax in Portugal. You're paying into that. And since you're self-employed, we report that as what it is, freelancing in the US. Self-employment tax does come up as a potential tax in the US return. But we are able to say that you're in a country with a totalization agreement, with this tax treaty that allows you to be exempt in the US.
Okay.
So at the end of the day, you are paying only Portuguese tax.
Can you explain how U.S. retirees living abroad can navigate the tax implications of receiving Social Security benefits, pensions, etc.?
In general, it's great to just think of where you are physically resident, where you're a tax resident, will be the place that subjects you to taxes. So general rule, your pension income, your Social Security, your interest, dividends, capital gains will be subject to tax in Portugal. The tax treaty, it does mention these items, and it does say that all of them will be taxed in Portugal, since Portugal, your resident state, will have the first right of taxation. The only exception is US Social Security, as that is and should be taxable only in the US, although Portugal may reserve the right to tax it anyways. That's why the tax treaty is so complicated. It says one thing, but Portugal can assert their right to tax it.
What strategies or tools can we expats utilize to optimize our financial situation while living abroad and earning income from various sources?
Number one, the biggest strategy that I would say works for every taxpayer is file on time, pay on time. That's always going to be the best because it'll save you penalties, it'll save you interest, it'll save you stress. That's the number one strategy. Number two is make sure you have a Portuguese tax advisor and a US tax advisor in your corner, and be proactive in telling them and planning your life, because of course everyone needs to take money out from their retirement, but it's timing of taking that out, the amounts that you can take out, that can really have an impact on your ultimate tax rate in Portugal, in the US, and globally. If you're having other sources of income, maybe you have a rental property back in the US, maybe you have a large expected income flow from the US, we can do some planning to block that income from Portuguese taxes, for example, which can be really useful if that's a significant chunk of your income.
Would you file, you're in Spain, I'm in Portugal, but would you file in Spain or Portugal first and then take that in order to be able to apply for the deductions and options that are available in the United States?
Absolutely. We always encourage our clients to file the resident tax return first. So Portugal, Spain, wherever you're living is going to file first, because in general, that country gets the first right of taxation on all of your income. There will be exceptions to that when you have a lot of US-based income where the US should get the first right of taxation, such as US Social Security, maybe you have a US business or US rental income. But in general, we tend to advise our clients to go first with the Portuguese tax return. We see the total income, we see the total income tax effect, and then we can claim all the applicable credits in the US on the US return.
Are there any specific tax saving opportunities or deductions available to U.S. expats living abroad that we might not be aware of?
The biggest ones are going to be the foreign tax credit and the foreign earned income exclusion. Those are huge and those are great. But there are some other additional deductions that we can take, such as the housing deduction. That one is kind of a sister to the foreign earned income exclusion, where based on your cost of living and the cost of your housing, you can take an additional expense, additional deduction against your taxable income. There is the child tax credit that people think, oh, I don't live in the US anymore, I don't qualify for this. But you can. If you have children that qualify, you can still take the credit, but you can only take it if you use the foreign tax credit.
What are some common mistakes or misconceptions that U.S. expats often have regarding tax obligations, and how can they be avoided?
I think one of the biggest ones is reading online that there's this foreign deduction, this foreign exclusion of $120,000, and saying, no, I make under that, I don't have to file taxes, I don't have to pay anything. That's a huge mistake, because even if you are under that, you still have to file. You still have to show the IRS your work, or you're not in compliance. Another big one is the tax treaty. A lot of people might download it, see that it's 30, 40 pages, say, okay, my interest that I receive, my dividends, that's in the treaty, I don't have to pay taxes on that. That's not quite true either. Even if the treaty does say exactly what we want it to, and it does exclude certain items like Social Security benefits, you still have to report that on the tax return with particular forms that say you're using the tax treaty.
Use a CPA that knows expat taxes to help you get this done, so that's done correctly.
It's really important if you are involving yourself in international activities, you're living abroad, you have a business abroad, you're paying taxes abroad, that you consult with someone who has worked with international activity.
The things that Bright Tax does is they allow you to have a consultation with your CPA to get an idea of what you're doing when you first set up. And I just wanted to make sure that everybody knew about that. Is there any other things that we would want to make sure we're clear about with regards to your company?
Yeah, so the first consultation with our CPAs, you're usually getting on the phone with a CPA or a credentialed expert who's done this for years, and it's free. That's really important. You get to find out what your tax filing requirements are. We'll tell you more or less what the cost of doing so is.
How can U.S. expats proactively plan and manage tax liabilities to minimize the tax burden while living abroad?
Proactive planning, that's going to be the key for a lot of expats, because knowing exactly where you're going to be paying taxes, when you're going to be tax resident in Portugal or wherever else, and being able to adjust your ideas and your expectations. Paying on time, filing on time, that's number one always. And then there's always movement we can do with, you have a US rental income coming in, we can set up a corporation perhaps that blocks that income from being taxed in Portugal. Just one example, but there's many options that we can put into place to keep your global tax rate as optimal, as minimal as possible.
So contacting you prior to even considering the move abroad, or when I'm in that beginning stages, looking at the visa, looking at the countries, it's always good to go ahead and start having that conversation as a U.S. expat.
Absolutely. Time is one of the best tools. Just having a conversation early, knowing what to do, having a plan in place will really help save a lot of money over the long run.
And that's a wrap. We want to thank Nicolas and remind you to explore all your tax obligations while you're still in the planning stages for your move abroad. Our Bright Tax affiliate link is in the description below, as well as our Portuguese tax attorney. Our Moving Abroad program is coming soon. Let us know what we can help you with. Our programs, Patreon, and affiliates are how we support this channel. They are located in the description of our videos, as well as on our website and Patreon. We'd like to take a moment to thank all our Patreon supporters. Your financial support is truly appreciated, allowing us to create new content. We hope you continue to come along with us on our new adventure. Please like, subscribe, and hit the notification bell to help us grow. The next stage in your life is a journey.